Good morning. Welcome to IG's early morning call. It's Tuesday, the 16th of January. Let's take a look at the headlines as we await what looks like to be a lower start to the European trading day. And the Nikkei 225, having surpassed 36,000 yesterday, is down for the first day in nine, with the Nikkei pulling back from those highs not seen since early on in 1990. Take a look as well at what's been happening in terms of economic data. We've got the UK jobless rate remaining at 4.2%. We've got average hourly earnings, which includes bonuses, rising less than anticipated. This is good news in as much as it means that the wage price spiral that many have been worrying about may yet develop, but it's not as strong as it was, which gives the Bank of England a little bit more room, potentially, to shift things should it feel the time is right to start to lower borrowing costs. And in amongst the earnings out this morning, Ocado stealing the headlines. It's been the best Christmas ever for the joint venture for Ocado Retail, which includes Ocado and Marks and Spencer. Let's take a look at volatility, indicating what we now know to be, as I say, a lower open to the trading day. When things kick in half an hour's time, we're looking for a lower start. We've got a rise, though, on volatility. We're currently now trading at the highest level not seen since the 5th of January, fourth day in a row of gains. But as I said, whichever way you cut it, it means a lower open to the European equity markets. This is the first time this year that we've seen the FTSE 100 dip below the 200-day moving average, with the lowest now we've been at since the 15th of December. And this indicating to me that things are beginning to pick up nicely on the downside. And anybody that's been in the markets after having seen the momentum index pull back, the MACD with the blue line below the red dotted line now since the beginning of the year, it's an opportunity to sell this market. If you've not already enjoyed the ride on the way down, still time to put something on. We are going with the idea that you put your stop loss above the 7,600 level. 75.63 is where we are. Where do we go down to? Well, using the Fibonacci, let's take a look at what we've got in terms of the potential move that we've got. If you take this low here, you've got some support below where we are at 75.30, which is a 61.8%. If you steam past that on the way down, you're then on the way down to 74.74. The 76.4% retracement, which would take you then down to the bottom of this blue box, which is where we started out the year back in 2023. So that's all that the blue box is on there for, indicating that 3.2% uplift in the markets so overall last year. So this is now looking as though it's a fairly hefty drop on the markets. We've got declines as well on the DAX, but we're only down at 1 week lows there at the moment, at 16,541. French markets also on the way down today. Second day I think it's the third day actually, if you count in the back end of the weekend, for the Davos conference, the Rebuilding Trust conference, as they're calling it this year. For me, not an awful lot coming out of that, to be honest with you. I'm more interested in some of the data that we're getting out this morning, and also some of the moves in the corporate world, which I'll report on over the next couple of minutes or so, which will give us more an indication potentially as to why we're seeing declines across the European equity markets. Let's take a look at what's been happening overnight in the Asia Pacific markets, where we've seen losses pretty much across the board. Nikkei 225 losing that mantle of the best performing still technically speaking in that mantle of the best performing market, but it is seeing a retracement by a margin of 0.75% on the trading day there. Hang Seng Stock Index down over 2%. More concerns now about the interference from the Chinese state and the tech sector. S&P ASX 200 down over 1% on the session today. We've seen some commodities on the way down today, which will indicate in just a couple of minutes' time. Let's take a look at that Nikkei, that best performing market on the developed world. This is where things are with that rise to levels not seen since February 1990. And then this retracement, as I said, it's 0.75% on the cash session. We're now down 0.2% on the 24-hour markets, which we're now trading on the IG platform. But you can see this gain that we've seen, lifting what was a 28% rise last year into more positivity with that rise over 36,000 for the first time in almost 4 years. So Nikkei, still, despite the fact we're on the way down, still holding on to much of what we've seen recently. ASX 200 ending the session at a 1 month low, dragged down by those commodity stocks. Let's take a look at Wall Street, remind ourselves as to what happened out on Friday. This is the Friday close, of course. We had Martin Luther King Day yesterday, but we did see 24-hour markets trundle on, and the 24-hour markets were broadly speaking down. Let's show you what's been happening. This is the S&P 500. down yesterday. And we've got a pickup on that on the downside at the moment. So indicating now potentially a lower start. And we're now down on the year again. We've been down before, but we're now down again on the year. 47.64 is where that market is. Now, we're fully expecting some of the other areas of the market. Let me just quickly turn this into the NASDAQ so I can show you just what's been happening with US Tech 100. Declines yesterday, 16,741. Concerns about the outlook for the US economy, not necessarily that it is going to be something where we're going to see some disappointing numbers. On the contrary, we're expecting numbers to hold up, which indicates the Fed may be happy leaving interest rates on hold in March. Is that now the base case? We've got retail sales, I think it is out on Thursday, which is going to be interesting. Also, as expected overnight, I just want to show you what's been happening on the 24-hour markets on the Dow. While I tell you that Donald Trump secured a resounding victory in the first 2024 Republican presidential contest in Iowa, it was the caucuses. Trump won by an unprecedented margin for an Iowa Republican contest with 95% of the expected vote tallied. Trump had 51%, DeSantis 21%, and Haley 19%, according to Edison Research. Look at this fourth day in a row of losses for the Dow Industrials. Nice, neat trading lower period here. We are now at the lowest point we've been at since the 9th of January. But broadly speaking, not too far away from those record highs that we've been securing, up at 37,800 for the Dow. Fourth day in a row of declines expected at a lower start when things get underway later on. We've seen some economic data out overnight in Australia. Let me just quickly catch up on what's been happening there. It's the Australian Westpac Consumer Confidence number. Index falling to 81 in January from 82.1 in the previous month. The index holding below the neutral 100 mark since February 2022. This is the longest streak of negativity since the early 1990s recession. Just wanted to show you, we've already seen the Australian equity market on the way down. I want to show you the Aussie dollar. The Aussie dollar is in part on the way down because of that stronger US dollar, which I'll catch up in just a moment. But I think there's also some element of disappointment with this Westpac number out in the Australian dollar at 66.19 cents, not too far away now from the 200-day moving average at 65.84. If you're short on this, keep on bringing your stop loss in, and your stop loss should now be just above the 67 level. And the view is that we're going to see at least, I guess, a drop down to the 200-day moving average at 65.84. That would be a natural sort of area of support potentially, and then a total retracement on this move down here at 65.25, which were the lows we had back on the 7th of December. I want to catch up on some economic data before we take a look at the dollar. Economic data here in the UK. We've seen some breaking news just half an hour ago coming through on the jobs front. Unemployment rate remaining at 4.2% in November. Average hourly earnings, including bonuses, 6.5%. Now, this is lower than the 6.8% that had been anticipated. And we're seeing other data coming in slightly softer as well. I want to show you what's happening with sterling at the moment on the way down against the US dollar. Let me just quickly transfer this timetable into a 30-minute candle chart just to show you what's been happening since the release of that data. A big strong candle on the way down at 7 o'clock this morning, translating into a nice, I say a nice drop. I mean, it's not good for sterling itself, but it is nonetheless giving you fairly sure direction of travel here for the pound on the way down. 126.70, your stop goes above the 127 level if you're short on sterling against the US dollar. One of the reasons for this is because we've got this dollar basket and the dollar higher. And there's a little bit of a gap up actually from yesterday's close, which of course was that market where the US was out yesterday for Martin Luther King Day. A little bit of a gap up today at 106.52. In today's session, we've seen the highest intraday trade we've seen since the 5th of January. But if we close at these levels, it'll be the highest close that we've seen since mid-December. And this just goes to show, I think, for me, what's happening on US data. Last week, we saw a slightly stronger than expected CPI print. If we get slightly stronger than expected retail sales, which I guess is possibly the risk, and if you get that, I think it'll mean that the Fed will feel happier about keeping interest rates high to make sure it really has hit inflation down and out and the full count. I think that's really what people are waiting for, just to check to make sure. We had that warning last week from the word from John Williams, the Fed president of New York, saying the job really isn't over. Inflation is on the way down, but he's not yet convinced it's on its way down to 2%. He said he wants to see that before cutting interest rates. So it could well be that March might actually be in jeopardy. Let me show you what's happening very briefly, what's going on for the euro dollar trade before I take a look at the German ZEW out later on this morning. 109.19 is where we are. 108.83 is this line of support. This box here I've drawn on here is the area of resistance, or sorry, support that we've got between 108.83 and 108.22, which is the big area of support on this fib I've got here from the lows we had back on the 8th of December. Let's just remind ourselves what we got later on this morning with the ZEW. Economic sentiment out in Germany forecast at 12.7 in January. December reading was 12.8. Then later on still, Canadian consumer prices out at 1:30 p.m. today UK time. Forecast at 3.3% in December year on year. November had been 3.1%. Core CPI growth expected to remain at 3.8%. I think this just goes to show what we were talking about, and that is this positioning on the idea that maybe inflation hasn't been conquered. And if you get strong data coming through, which is, I have to say, is not in the Canadian economy, but in the US economy, I think that the US dollar will remain strong. And expectations are that we could well see the Fed keep interest rates on hold in March. I think we're erring towards that sort of risk now. This is the dollar rising against the Canadian dollar ahead of that CPI data. We're right up against a 200-day moving average, and we haven't traded above that since the middle of December last year. So it could be an interesting moment. And if we do get a number that shows that we've got a build on Canadian consumer prices, I could see the US dollar rising again on this. It's mainly because the US economy is stronger than the Canadian economy. And if you get inflation rising in the Canadian economy, it means that the Canadian Central Bank will have to keep interest rates at least on hold. And that is the risk. And that will mean we'll see further downside potentially for the Canadian economy in terms of growth, retail sales, and some of the other consumer-driven numbers. Now, let's shift away from economic data and what's happening on foreign exchange markets and take a look now at some of the corporate news headlines. We've got some good news coming through this morning from Ocado. This is a fourth quarter trading statement for Ocado Retail. This is the joint venture between Ocado and Marks & Spencer. Fourth quarter retail revenue of 609.4 million, up 10.9% on the same period last year. These are really looking good figures, actually. A fourth consecutive period of quarter-on-quarter growth and a significant increase in the 7.2% reported in Q3. Best Christmas ever for the two. Volume growing consistently over the period, up 4.8% year on year. Average orders per week on Ocado.com of 407,000. That's up 6.3% year on year. Active customers reaching 998,000 at the end of Q4, up 5.9% year on year. You get the picture. These numbers are really good, actually, I think, from Ocado. Average basket value up 3.8%. Basket size, this is the number of items, remaining broadly stable. That 3.8%, I guess, it's obvious, I guess, is just the fact that it's inflation. The average selling price up 5.4%, though. So that they've been able to raise prices year on year. Lower than the market inflation, reflecting Ocado's continued focus, it says, on improving pricing relative to the market. I want to show you the share price chart. We had this big gain in shares from the lows we had back on the 5th of June last year, right the way up to these highs, up 196% in July. Since then, there's been a bit of air taken out of the tires. 622 is where we're opening this morning. If you're long on this, your stop goes underneath the underside of the 200-day moving average, around about just below the £6 level. I put to stop loss if you're long. That being said, pressure building on the indexes on which it trades, the FTSE 100, I think it is, even if it's a FTSE 250, we're expecting them both to open lower at the top of the hour. That could see some selling pressure being brought to bear on some of these trackers. But I think broadly speaking, if you look at the numbers for Ocado.com, it is going to be one of the highlights, I think, of the trading day ahead. Let me take a look as well at what's been happening in terms of some of the commodity markets, in terms of what's going on with Rio Tinto, because very much focused on iron ore, from which it's benefited a lot recently. Rio reporting a second highest ever iron ore shipments in 2023, rising 3% over the year as a whole to 331.8 million metric tons, meeting guidance in line with city expectations. In its operational report, Rio expects China's stimulus measures to drive a gradual recovery in 2024, and the company's reaffirmed its fiscal 2024 iron ore shipments forecast between 323 million metric tons and 338 million metric tons of iron ore. Let me just show you what's been happening with the iron ore chart, just so I can show you what's been going on in this market recently, and we see a continuation of this drive lower. In fact, in today's intraday trade, between the lowest print since the 4th of December. So when you look at what's been happening with the background here, and then you look at what's been going on with Rio Tinto in the Australian market. So we just bring up the Australian share price chart of this, down 1.4% on the Australian market. So if you reflect that in where we are on the London markets, which is London Rio Tinto expected to open lower, we're going to get a break of this line of support down here at 530.70. 544.3 is where we're opening this morning, which will take us below that line. I had drawn that line, which was the highs when we saw back here on this double top that we had, and then a break of that coming through on 14th of November. So that is an area of support just below where we are, but I suspect we're going to get that broken today. Rio Tinto will report full year earnings on the 21st of February. Now, let me shift on to another company worth looking at. I want to bring up a share price chart of Wise. This is the money transfer company, raising its annual profit growth forecast. It's been doing brisk business on the upside recently, and in fact, breaking the highs recently that we saw back on, when was that? November 2021 at 869. The stock is going to open at 873.6 today. Third quarter income rising by a whopping 40%. Full year income expected to grow between 42 and 44%, according to the company, compared with its earlier forecast of between 33 to 38% growth, according to the statement from Wise this morning. Again, a bit like Ocado, it's going to be taken down because the fact that the market's generally lower today. But I think also we've got this upward move because of the reporting we've seen come through from this company. I want to stay on the charts, just take you up through as well to an announcement this morning from Vodafone. Let me show you the Vodafone chart, I beg your pardon. Vodafone will open at 67 pence today. Vodafone has announced this morning it and Microsoft have signed a 10-year strategic partnership to bring generative AI digital services in the cloud to more than 300 million businesses and consumers using Vodafone communication services. Vodafone will accelerate digital transformation and operational efficiencies in virtual data center migration to Microsoft Azure. So if you're a Vodafone user, you will see this starting to appear for the business. It's something like 1.5 billion over 10 years or something. So it is a bit of business which is of interest, but I don't think really it's going to change anything particularly. Microsoft ending out Friday's session. Of course, there wasn't any trade yesterday because of Martin Luther King Day. It will open at 9 o'clock this morning. We could well end up seeing a little bit of a retracement in this, I think, because not necessarily because of the deal. I think more so the fact that people are taking the market down over the last 24 hours when these all-session stocks haven't been trading because of the Martin Luther King Day yesterday. Open at 9 o'clock this morning. Microsoft will open at $338.33. Now, let's shift on back into what's happening in terms of US earnings, because Goldman Sachs is due to report before the bell on Wall Street today. The investment bank is forecast to report earnings of $4.50 per share, which will be down from the $5.47 posted 3 months ago, but a substantially higher number than the $3.32 from the same quarter this time last year. Because we saw some markets out yesterday, we have to look back to last Friday where the four major banks reported. JP Morgan was the only one that rose. It was up by almost 1%. Citigroup fell by 1.2%. Wells Fargo 2.3%. Bank of America 2.4%. All the banks are setting aside some large amount of money to hit by the FDIC special assessment. Investors now wait to see just how much and what previous provisions Goldman Sachs will set aside for this. $8 billion was the total amount by all four banks last week. Also, the big question is, will Goldman announce job cuts? This could be an area of vulnerability, I think, for Goldman Sachs. Citi announced on Friday it's parting with something like around about 20,000 jobs over the next year. That's around about 8% of its total workforce. Wells Fargo also reporting job losses. To have to see what comes out today from Goldman Sachs. I want to show you the share price chart for Goldman Sachs, bearing in mind that we saw four banks reporting, all three major investment banks on Friday outside of Wells Fargo reporting some interesting numbers. Big wild trading on the candle on Friday for this, but broadly speaking, Goldman Sachs share price breaking out of a broad descending triangle in December has since been testing the November 2022 horizontal resistance at 391. You have to go all the way back to this sort of area down here. And then you've got the drop we got on the markets overall. I had to see how things open for Goldman Sachs at 9 o'clock this morning. It's an all-session stock. I suspect we could well see a little bit of a decline on the share price. And got those numbers out from Goldman Sachs before the markets open today on Wall Street. Just want to update you on what's happening in terms of the move I was talking about late last week with this Elliott wave recovery. It doesn't seem to have transpired. There was a big rise on Friday because of the Houthi rebels issue with the US and the UK striking Houthi rebels. There was clearly some sort of disruption to the market. Since then, we've seen a little bit of a pullback. I suspect there's two tensions going on here. First of all, is a supply issue about the Red Sea, and that would have an upward lifting effect on this if we were to see that. But on the other side, the demand side, I think if US interest rates stay on hold in March, then we've got that idea that demand is likely then to be restrained, because growth could be restrained if you see interest rates remain high. I'm still awaiting for some sort of development. This will come when we get to the end of this symmetrical triangle here. There'll be a breakout at some point. On Friday, I had this rise up here all the way up to about the 8,800 level, but you've now got to pull that back in, depending on where the break is of this. And assuming it's on the way up, it might even actually be on the way down, in which case potentially then you've got downside to come as well. Let me just copy that to give you an idea as to potentially where it could well end up on the downside if we get a break on the downside of this. If you get a break on the downside, then of course it's not then an Elliott wave, because you then don't have the correction phase here. So there's a lot of question marks over what's happening. MACD is still pointing up, indicating potentially upside movement. We'll have to see how things there develop. Yesterday, the Iranian-backed Houthis vowed to widen their targets in the Red Sea to US ships following US and British strikes on their sites in Yemen. Staying on the charts, just update you as well on what's happening in the price of gold, just for the sake of the fact I can. 3 days of gains. Today, on the way down at 20.49. That's it from me. We've got about 8 minutes to go before the start of today's European session, looking for losses across the board, mostly here in London. A lot of commodity stocks on the way down, as we've seen with Rio Tinto, despite the fact it saw some really good shipments from iron ore last year, beating market expectations. The stock down 1.4% in Australia, which could well mean we see declines here in the London markets when things pick up at the top of the hour. But do watch out potentially for upside as well. Good reports this morning coming through from the likes of Vodafone deal with Microsoft, with the likes of Ocado and Wise potentially on the way up. It all depends on just how much selling there is on a broad range of stocks, because the fact the markets are on the way down at the start of today's session. We're back at 10:30 with Charting the Market.